Good morning and welcome to Morning Markets with True Potential. As always, we will look at what has happened over the past 24 hours in the markets, but we will focus on some job data coming out of US. Following the big moves on Tuesday, yesterday was a bit calmer day in the markets. We saw global equities doing a modest 0.2% gains overall. We also saw bond markets reacting on a sideways move. We saw some movement in gilts market. Gilts yields came in around 5 basis points overall. We saw US Treasuries doing a sideways move as we saw a little bit weaker demand from investors on 10-year auctions in the US. But again, focusing back on the big news data print from yesterday, we saw US private job data coming out yesterday, which came out stronger than expected. Again, it's continued to build pressure on the Federal Reserve in the US to continue increasing rates. And as this comes in line with what we heard from Jerome Powell over the past 2 days. But if you look at other data, we saw a number of total job openings eased to 10.82 million in the US. This is after we saw a record high of over 11 million jobs in the US. So some relief on one hand, but there's a counter on ADP number, the private job number which came out in the US. What it means for the market in general, we will see that what we heard from Jerome Powell over the past 2 days, there is a continued pressure and inclination of continuing to raise rates in the US and perhaps even at a faster rate. If you look at other data point which came out yesterday was German data, which came in stronger than expected. We saw industrial production increased surprisingly from the drop we saw in December. We also saw the power intensive, energy intensive sectors doing pretty well given the softness we have seen in energy prices lately. We also saw construction activity also picking up. What it means for European markets overall, we will expect that it puts a further pressure on ECB to continue raising rates as they meet next week. Expectations are again 0.5% increase in their benchmark interest rate. So again, broadly, we see that inflationary pressure and activity pressures are continuing to put upward pressure on interest rate overall, which means that there will be tightening and there will be bond market volatility yet to come. But as always, we will keep you posted. For now, I will leave it there and thank you very much for watching Morning Markets.